Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So we are into the new month, the month of February in 2015. So today, it is 2nd February between 5 and 5:30 GMT. I'll explain the expected market moves for this particular week, 2nd to 6th of February, during this Asian session live market analysis webinar. So first of all, we'll look into the derived forecast, and then we will try to understand what is happening in the market. Now, this is the first week of the month, February. So you will come across the month beginning trend reversal move. But this time, we will come across the volatile move is bound to happen, but there could be a visible upward move in the case of Euro and GBP during this particular start of the month. So in the month of February, we'll come across the Euro and GBP are expected to gain significantly, and that may give that impression to the traders that the low is set for the season. So that sort of moves are expected to happen. So today we are in 2nd of February. A small dip and a firm up is expected to happen during the Japanese session, and then swing and slide is expected during European session. Afterwards, during the US session onwards, they will start making the rise. So Euro and GBP are expected to gain more levels during that of the US session. Then afterwards, tomorrow during the Japanese session, they are expected to make a small slide and then gain during the European session and slide during that of the US session. So either way moves could be seen on Tuesday. Then Wednesday, they are expected to make some visible gains in the market. So swing and rise, swing and firm up, and swing and rise moves are expected as the intentional move on the upside in the case of Euro and GBP. Then again, Thursday, they are expected to make the rise during that of the Japanese and the US session, and then swing and slide during that of the European session. And on 6th of February, for the non-farm payroll, they are expected to make initially a good rise in the case of Euro and GBP, discounting the non-farm payroll, and later on they will make a small slide during that of the announcement time around 13:30 GMT and start gaining the levels again. So then you will come across that everybody talks about risk appetite in the market, and many might say that Euro and GBP were beaten out too much, so there is a relief rally. So they can give any sort of attribute. Ultimately, the players are expected to gain the levels in the market, and afterwards, the second week of February, the trending time is going to commence from 9th to 13th. The week beginning false move could be seen on 9th of February. Then afterwards, you'll come across the steady upward trending move. So after a prolonged USD gaining move, you will come across the other majors gaining moves during this particular time frame. So you might get that impression that every rise we should sell in the case of Euro and GBP, but this time onwards, if you try to do it, because the time will bring the difference, and ultimately you'll find we could get trapped. So it is better to do buy and sell trade, buy during that of the slide, and then book profit during that of the rise, this being the first week of the month. So you can still continue to do the swing trade. From next week onwards, you can do the position trade so that you will be able to consistently make money from that other market. So this is basically a forecast which is expected to narrow your uncertainties so that you know very well during this particular session they will firm up, but look into that of the live market web page and see how exactly they are making the moves and whether they are making an intentional move or the extended move or a stop and during start of the session or end of the session. And whenever they make a downward stop and you try to take a buy, and when they go in for an upward stop and book profit, or during the upward extended move, book profit, or during the intentional move on the upside, book profit. So that way you can try to define your trades. So that will help you to make money during such quick moves happening in the market. So instead of getting afraid of the quick moves, you will be able to perceive such moves as good quick trading opportunities in the market. Now, coming to the levels in which the currencies are expected to gain or lose, so euro is trading around 1.13 level, 1.13 to 1.1328, and it is expected to make a small dip below that of 1.13 as a stop, and afterwards it could come across the gain above that of 1.14, and we will find then the people will start making the buy and sell trade at that time. Then in the case of GBP, also they are expected to make some aggressive gains, and you know very well that GBP is the currency considered as the lead in the market, and they always use GBP to create the market sentiment, and also they use USD yen to just reverse the sentiment in the market. So this time, to reverse the market sentiment, they are expected to make a quick drop in the case of USD yen. And when USD yen drops, automatically nobody will try to sell euro and GBP. They may initially hold euro and GBP, drop USD yen, and then later on gain substantially in the case of euro and GBP. And also USD yen, they will slowly gain back the levels. So that is how they try to do it in order to handle the yen crosses and also the yen and other to change the market sentiment. They use USD yen as a trigger. So in that process, you will find GBP is also expected to gain quickly to change that sentiment of the market. Then in the case of USD CHF, as expected, they come above last time. Even though euro was not dropping, they considerably gained levels in the case of USD CHF and also in the case of euro. As a result, euro CHF has come to 1.03 level. So slowly they will gain back to that of the SNB level of 1.20, and they may say that SNB might consider intervening in the market or any other excuse for that matter. So ultimately they made a huge profit during the trend reversal time by making an extended stop and on the downside for about 3,000 pips and then reversed the entire market, and everybody is afraid of buying, but every day they are gaining 150 pips in the case of USD CHF, which was considered as a very slow currency earlier occasions, but now you find USD CHF is making a swing for about 100 to 150 pips on a daily basis. Then in the case of Canadian dollar, they made one-sided gain as an extended upward stop, and in order to trap all the short sellers to come for a short covering, and they gained almost to 1.28 area on Friday, and afterwards they are holding it at a lower level, and you would have noticed on Friday they gained it almost close to 1.28 and dumped it in a big way to come to 1.2715. So that way they tried to dump all their buy positions and also build sell positions. And later on, they are expected to make a one-sided drop in the case of USD CAD as well. So you know that when USD yen was gaining the levels to 122, USD CHF and USD CAD were not participating. They were slowly making the moves. Now you find that USD yen is making a big drop, where at that time USD CHF and USD CAD gained. Then afterwards you will find that USD CHF is to hold and USD CAD is expected to drop. So along with that of USD yen. So alternatively, they handle the denominator currencies in order to handle the respective crosses. So that you need to keep it in mind. So there is no question of continuously doing USD gaining and the USD weakening moves in the market, and the players here afterwards are expected to make the contrarian move most of the time. So we may have to study individually the currencies and try to find out what they are trying to do it in the market, and you can understand how exactly they are making the moves in the market, whether an extended move or an intentional move, and looking at the net changes. If you look into that of the net changes, you can understand what they are trying to do it in the market and what currencies they are expected to make moves. Now, if you find that Euro is in positive net change of 13 pips, GBP is 19 pips positive net change. And in the case of USD Yen, it is 29 pips positive net change, 26 pips positive net change. So they made the quick drop and then gained the levels. All the three are showing positive net change. Along with that, USD CHF during start itself, which is showing about 69 pips positive net change. Then Aussie is showing about 4 pips negative net change, which is a contrarian move. When Euro and GBP are showing positive net change as a numerator currency, Aussie is showing negative net change of 4 pips. So which is a contrarian move. And other currencies, USD CAD is also showing about 28 pips positive net change. They gained slowly the levels in the case of USD CAD in order to make a drop later on. So you find that in the market, they are making at the moment contrarian moves. So the denominator and the numerator currencies are showing positive net change, excepting Australian dollar. So slowly they will try to bring in USD gaining and the USD weakening moves during specific hours. So here what you need to understand is, okay, they are handling the crosses at the moment, especially the commodity crosses. Afterwards, they will come to that of the yen crosses. So yen crosses, when Euro and GBP are showing positive net change, USD yen also they are showing positive net change. They are slowly making a small gain. Afterwards, dump USD yen and holding Euro and GBP. As a result, the yen crosses will come down drastically. And that is how they are expected to make the moves in the market. Now, coming to that of the market reading, comparing the initial lows and the highs. Okay, it formed the initial low 1.13 and the high was 1.1328, just about 28 pips spread, and in that it is holding in the middle level, so you don't come across that high or the low. Initial high or the initial low are not breached. Then in the case of GBP, 1.5072 and 1.5102 are not breached. And in the case of yen, 116.77 is the low and 117.89 is the high. They are not breached the low or the high, but it has made a very quick move. The spread between the high and the low is almost close to 100 pips. So you can understand how they have quickly made the move in the case of yen. Then in the case of CHF also, they made about 76 pips spread. Only in the denominator currencies. In the numerator currencies, they are not increased as the spread during this time frame, mainly to handle the respective process. So 92.02 and 92.78 are the lows and the high, they are not breached. Canadian dollar 1.2680, 1.2740, they are not breached. And Australian dollar 72.46. Sorry, 77.46. And 77.96, they are not breached the low or the high. So everywhere you find that they are not breached the low or the high and they are simply holding the market, and slowly you will come across that they will bring in the necessary changes in the market in order to trap the traders. So they create the market sentiment and act against the traders, we know very well. And during this sort of the month beginning trend reversal time, they are expected to make volatile moves. So this volatile move, you need to understand how they are going to do it, and that is why I have given the expected market moves for you. So you can understand the numerator currencies are expected to gain considerably during this particular time frame, and for non-farm payroll also, they are expected to make a dip before the non-farm payroll, even though the number might be in line with it of expectation, they will simply say that it is a risk appetite, and then they will quickly gain the levels. How long they can beat Euro and GBP, and the traders are afraid of entering into the market. When the volume dwindles, so automatically they have to change their strategy in order to attract the volume. So initially they attract the volume, and then they punish those who hold it for a long time, the position without the stop, by making some extended move. And afterwards, once they find that the traders are no more holding the position for a prolonged period, when they make about 500, 700 pips move against them, then later on they find the traders start using the stops. Otherwise, they find that their margin call might cause a big damage to them. So when they start using the stop, the players will try to make either way moves in the market and try to hit the stops and earn. So they give in one or two trades the profit, and once the going is good, when the traders commit more position, the players trap them. So always keep in mind that expect the unexpected, and that way you can cautiously trade and see that you are not trapped vulnerably in the market. The best way to handle it is to use the hedging. So what you do is do the market reading, and when they are closer to the high, take sell position and not breach the high for more than 30 minutes from start of the session, or when they are closer to low, then wait for 30 minutes from the start of the session and not breach the low, or when they do a stop and come above that of the initial low in less than 30 minutes, then you can take a buy. Then afterwards they are expected to make the move opposite to that of the stop point. Then book profit within the session using a stop at entry to start with, and remove the hedge order or the sell stop or the buy stop, and then start trailing the stop in profit making position. So we use the trailing stop in profit making position, and we use the hedging order in the loss making position. So whenever the position is taken, it will start making loss. So we try to keep the hedge order to limit the risk, so that we will not accept unlimited loss. Instead, we will hedge the position. And if the market go crazy from there, and if you are not able to understand what they are trying to do it, we can simply close the hedging with that of the original position, accepting 30 pips loss. So that way, if you use the hedging, which will give you innumerable permutation combinations of trading strategies. Then keep 45 pips limit order in order to exit out of the position where that move is very quick. Then keep 75 pips limit order, so that they will be able to either fill your trailing stop, which is kept 15 pips away from the market, or the trailing limit order, which can be kept at 75 pips. And later on, when the going is good, you can move it up to 150 pips, but try to close it, because beyond that, they don't make extended move, and only occasionally in one or two currencies they may do it if needed. So it's better to aim for 150 pips. Once they show it, probably wait for about 30 minutes. When they don't breach the new high or low for more than 30 minutes, simply close the position. That way you can handle the trading. Thereby you'll be able to see that you are holding only profit-making position and not loss-making position. So holding the loss-making position is not position trading. So in this week, I'll come back again on Friday or Thursday, 5th of February, and try to review the forecast, what I have given it. And on 4th, that is Wednesday, we'll be doing the Tracking the Forex Market Together webinar, part 1 and part 2. So I will take the positions during that of the early part of the European session and just to review it by late European session. On Wednesday, 4th of February, if you see the forecast, the market is expected to make a considerable gaining move. So I will try to do the buy and sell trades during that time, and buy near that of the low and book profit near that of the high. That sort of trades I'll explain to you, and you can see how exactly this forecast I'm using it as a guidance. Then I do the market reading using that of the initial lows and the highs and how exactly they are making the moves in as the stop and false move, extended move, or the intentional move. And later on, use the trading strategy to limit the risk and maximize the profit so that we be in a position to do fearless trade. Ultimately, one needs to develop the insight to do fearless trade. Only when you learn how to do fearless trade, not simply that telling that I am brave, but I will cry whenever needed. It is not bravery, and real bravery is that you have the strategy, your mind still work when the market makes some sudden moves. And only when you are able to use your common sense and try to handle the position at that time instead of crisis management, and that is the stage wherein you don't get the market fear. So try to see that you don't get the market fear, and then you will find that you are able to really trade well and earn well. It's something like learning the process of driving a vehicle, and initially you may come across the road's fear, and you may be very cautious, abundantly cautious, and you might hold the steering with the fullest grip possible while trying to drive it. And later on, anybody guides you will say that relax and don't handle the steering in a very firm way so that you might find it very hard to turn it, and hold it very lightly so that you can move it at ease and learn the process of driving. Once you learn, you don't even look into that of the steering, and you simply talk to somebody and you look into that of the road and see whether anybody is crossing and things like that, and start driving it at ease. The same way, you should be able to learn the art of trading and then do it at ease. So try to learn that particular skill set, and in that process, don't make it as an expensive learning process. And if somebody learns on his own and try to hit various other vehicles and claim it from the insurance, and later on try to learn, it becomes an expensive learning. Similarly, if you open 2-3 accounts and try to learn from your trading experience, then it becomes a very costly affair. So learn it from a professional and see that you don't get the market fear, and you are able to foresee the market moves. And only if you foresee the market move, the market fear will come down. Besides, always use the trading strategy. Tell yourself that the market can make an unexpected move. So unexpected move can happen at any time. So I have that contingency plan of hedging order to limit the risk, and I will not take undue risk. And once you plan it that way, you find you really learn the process of trading and handle the positions at any market level. So I'll explain to you during that of the tracking the forex market together webinar more in detail about that of the type of moves and also how to identify. Then you will find that you can really make some sensible trades. Let me answer the questions which are asked here. There is a question from Srinivasan. How do they know the traders who do not have stop loss? Is it visible for them? So it is a very simple game. Suppose they have just given about 1,000 positions. 2,000 traders, or traders have taken 1,000 positions, and all the positions are given by that of the players to the traders, because You may also keep some orders, but we will not be able to move the price. We may keep some orders, but we will not be able to move the price on the upside or the downside. Only the bank, by placing huge orders, they will be able to move it on the upside or on the downside. So they are least bothered about 1 lot, 2 lot orders. They are interested in 50 lots, 100 lots, etc. And many of the institutions, and they keep the stop loss, but at a wide range because they do not want to incur loss. So they players, what they do is when the stop is not available, when they are given 1,000 lots and there are only 40 lots of stops, they're remaining or without stop. So they can easily estimate it by making quick moves in the market. Once you become a player, then you will also learn the secret. It cannot be discussed in an open forum. Then Richard, what will be your view on New Zealand dollar? New Zealand dollar drop is over and they are expected to gain more levels in coming days. Then Richard out, New Zealand dollar. So they should be reversing from the top now around 0.74 area. When can we expect a yen to drop? From today onwards, USD yen is expected to make a drop, and that will give the trigger to the other market. So keep that in mind. They made a wide spread in the case of USD yen, and slowly they will make a drop. And you know that earlier, when yen was around 122, euro and GBP were at a higher level. So initially, they made the drop in the case of USD yen and holding euro and GBP at a higher level, and later on making a narrow range swing in the case of USD yen and dropped euro and GBP. So that way, they try to handle all the yen crosses. This time, what they will do, they will just make a drop in the case of euro and GBP. Drop in the case of USD yen first, and which will give the trigger for euro and GBP to go up as a USD weakening move. Then later on, they will gain the levels in the case of USD yen also. Similar to the drop, how they have done it in order to make drop in the case of yen crosses, they will make the drop in the case of USD yen to give the US dollar weakening sentiment and gain the levels in the case of euro and GBP, some more, and do lower level consolidation for a day or so, and then start gaining the levels slowly in the case of USD also. So USD yen and USD CHF, they are expected to make the continuous gaining move as a contrarian move. But in the case of Australian dollar, they are expected to make the USD weakening move, and also in the case of Canadian dollar, they will make the USD weakening move from here. That is why they extended the upward journey in the case of Canadian dollar almost to that of 1,000 to 1,200 pips, mainly to make slow drop during the course of the gains in the case of euro and GBP. And overall in the market, you will come across the USD weakening moves to come from this time onwards. Then Chowkiat has got a question. From this week onward, the euro and GBP will move upward. Yes, this week onwards they will start gaining the level, but from next week we'll come across the moves will be very visible on the upside. This time, being the first week of the month, they will make volatile moves. So whenever the going is good, try to book profit and re-enter whenever they make a drop. And you know that non-farm payroll, which is considered as a prime event, so at that time they will try to make one quick drop and induce the traders to going for long liquidation before that announcement of the non-farm payroll, afterwards gains significantly on the upside. Then again, Monday next week, they will make the week beginning false move, followed by that they will make the gains. Then can you further comment on using the net change in tandem with that of the strategy. Yeah, I'll explain it. Uh, See, now the market is not either breaching the low or the high set in most of the currencies. So the net change is only 12 pips here. Still, they are not breached the initial low or the high in the case of euro, and also in the case of USD GBP and also. So nowhere they breached the low or the high. So in case if they just breach the low or the high, then we will be able to find out with the help of the net change. So here now all the currencies are showing positive net change excepting New Zealand dollar and also now, yes, Canadian dollar, Australian dollar, all are showing positive net change. So now Australian dollar is also showing 1 pip positive net change. When they make like this, all currencies are showing positive net change, and that will be mainly to handle the crosses of the such majors. So they handle nominally the crosses, and they made big moves in the case of yen, also in the case of CHF, and other currencies they made only nominal moves. So later on you will find in the numerators are showing positive net change and the denominator showing negative net change, then you understand that they are making the USD weakening move. And if the numerators show negative net change and the denominator show positive net change in all the 4 majors and 2 commodity pairs, then we understand that they are making the USD gaining move. And so there are 3 types of move. One is USD gaining, other one is USD weakening. The third one is the mixed move. Some currencies showing USD weakening, certain other currencies showing the USD gaining move, and that is referred as a contrarian move. These moves can be identified with the help of the net changes and then understand what they are trying to handle. So when they are trying to handle the crosses by showing all currencies in positive net change, there is no point in taking positions in the case of the majors. You can only trade the crosses. And also when the spread is less than 40 pips between the high and the low, it is not advisable to commit a position in such currencies. So these are all the conditions with which we will commence the trade. I'll explain more in detail on Wednesday. Then Srinivasan, will Australian dollar reach 0.795 in 2 to 4 months? So we will look into that of the long-term forecast later on. So we will try to see that the trending move starts. Then later on we will understand about the various levels they could show in the market during the coming days. So because invariably what happened when I tell the long-term views with regard to the market, many of the traders tend to hold the positions and later on say that you are only telling that the euro and GBP will go up to these levels, that's why I was waiting. And that sort of thing should not happen to that of the small traders. So I will try to focus only for this week trade. Then may you please comment on allowable daily pip range? See how many times I have to give it. So these days we see these did very large moves. So during the yearly trend reversal moves, they will do large moves, but the limitations with regard to the net change, in the case of euro and GBP, they do about 150 pips. And in the case of CHF and yen, about 200 pips. They are the limits. And in the case of Canadian dollar, is also 200 pips, and Australian dollar about 100 pips. So that will be the prescribed limit. At the event when the liquidity crisis happen, then they extend to 175 pips or 200 pips and come back to that of 150 pips after this. So I take this opportunity to thank FX Trade for the facilities provided, and also you people who have come here to listen to the webinar. And if you've got any doubt, you can ask your questions when the recorded webinars are posted in fxtrade.net and also fxtrade.com. And I'll be willing to answer your questions. And I'll come back on Thursday and review the forecast, what I've given it. Before that, on 4th, I will explain to you tracking the forex market together webinar, explaining, giving importance to that of the trading strategies. Thank you. Wish you all happy trading.